Thanks, Facebook.
The following was recorded in front of a live studio audience at the Studio 21 Podcast Café. This is the United Podcast Network.
Welcome to the Stock Market Authority podcast. I'm Bakes, Kevin Baker. I'm going to teach you how to make money in up and down markets. Very few podcasters or coaches cover this. I'll show you how to lock in profits and minimize losses to make you a better investor. So once a week, you're going to know what's going on in the world and the stock market. Welcome to the Stock Market Authority podcast. Good morning. This is Bakes, Kevin Baker, Stock Market Authority. Welcome back from summer. Hope you had a great Labor Day. It's Wednesday, and I hope you're doing great. I think the guitar work on that is absolutely superb. I'm talking my book, as you might imagine. Today we're going to talk about uranium. Now, you might be thinking you're tuning into the Uranium channel, but frankly, I haven't been this excited about a group in a long, long time, and I don't want you to miss out. Sprott's URNM and URNJ, the two ETFs we own, are already making us money. And frankly, the reason I'm doing this is that a lot of you are getting back to school, going to your student-managed investment funds, your MBA programs, and I want you to get this live now that everybody has their game face back on. So we'll talk about uranium. I don't want you to miss out. I'm going to be as subtle as a 2x4. We're going to open the mailbag, talk about two energy ETFs and Disney, regrettably, foreshadowing. And we're going to go through the Stock Market Authority portfolio because I apparently like self-flagellation, and I like to keep my feet to the fire. Here's what we are doing, what I'm doing with my wife. I do all the work, by the way, in this regard. And I searched for the 10 best ETFs out there. I found the best two so far in the uranium world. And we're going to try to make money this year like we did last year when everybody lost money. But now, today's top story. Uranium powers up again. And I don't want you to miss out. And so I'm being a little bit strident, a little bit forceful, but believe me, I'm talking my book. You know, we already own these two, Sprott's Uranium, URNM, the majors, if you will, and then the URNJ, the junior miners. This is a chart of the junior miners that we have here. And I'm a little bleary-eyed. I was up late last night. I worked all during Labor Day, and I went through every 2,000 plus charts out there, every ETF you can imagine, and these are the two best. And I'm not kidding you. I don't say that lightly. I've seen them all. I've analyzed them all so that you don't have to. We're in a uranium bull market, and I know it's quirky, but quirky works. I did this with titanium and energy in the past, and we're doing it again here, and we're going to wait for a lot of other money managers to say, oh, wait a minute, uranium's up, and then they're going to come in and bid our stocks up. I just couldn't be more enthusiastic about this. And with URNJ, you basically own every smaller miner out there. The Camecos and the Kazatomprom are in the other ETF. But you basically have, with one click of a button in your Fidelity or Schwab or Robinhood account, whatever, you basically own every uranium stock out there, and I just think it's going north. I put down, just to keep myself honest again, back in June, this arrow that you see here, this up arrow, is the buy in June. I forget the exact date. But we bought it around 18. We're already making money. We're up 12%. And I want to, point out some other things. Things just keep getting better. We have a relative strength new high that you see here. It was 72 when I printed this, and it ended the day at 85 because it was up 6% plus yesterday. These are the kind of moves that you can have. That's a gap up. If you look to this arrow on the right, the top right, that's taking out the closing high. When they put this together in the beginning of the year, Sprott did, and obviously with a lot of enthusiasm, it drifted lower, it forms this sort of cup and handle, and we gap up to take out the closing high today. And what does that mean? That means that everybody virtually is making money. And so that there's almost no resistance to moving this higher because there's no one that's saying, hey, I made a mistake and I want to get out at break even. So you have this wide open playing field for the uranium story to unfold. And oh, by the way, it's fitting that when everybody comes back from the Hamptons and the Cape and the Vineyard and what have you, that the desks start lighting up and they start buying this. This is 3 times normal volume. So there's plenty of liquidity for you and I, but the institutions are coming back and saying, get me into uranium. And I think it's just starting. Again, we have a new closing high. You see here at this top, we have a gap up, which means that people want to buy it, after the long weekend and did so. And the excuse, if you will, is that Cameco, CCJ, the biggest uranium miner out there, cut production, which points to a couple of things. Number one, this is why I like ETFs, so that if one company has a production problem, even though I think it's going to be relatively short-lived and absorbed, then you have the effect of gathering what Cameco spills in this case. So here we have the smaller miners, production going up, and I just think this is very, very exciting. This whole space is about $60 billion in market cap. I think Warren Buffett carries that around in his couch, and he doesn't carry his couch around, but you get the idea. I'm mixing my expressions here. And literally, this is the best setup I've seen. You can tell I'm juiced up. This is a combination of Van Halen, copious amounts of caffeine, and uranium. So I want you to come along on this ride with me. Now, disclosure. I'm not a financial advisor. I don't know your financial picture inside and out. Do your own due diligence, and there's plenty of ways to do so. But I want to impress upon you that when you have these sort of fish in a barrel kind of opportunities, I want you to take advantage of them. They don't come around that often. And this isn't, the 87th analyst talking about Apple. This is a quirky niche of the market that has all kinds of fundamentals. When the technicals and the fundamentals match up, that's when you really make money, and that's exactly what's happening right now. So I'm not being vague. I'm not being subtle. You don't pay me to do that. That's what I'm here for. URNM, this is the second chart, and it's again, this is the second best looking chart out there out of the thousands, and I went through them all over the past couple of days. This arrow that you see here at the bottom, this up arrow, we bought it last month at about 36 or so. We're already up 10% plus in the course of 2 weeks. You know you're right when you're making money right out of the gate. That's what I always think. It's a new high, but not a new all-time high, as you can see here. The relative strength is picking up. There's this other arrow that you see here to the left. It's not an all-time high. I would be astonished if that doesn't come down the road. And the volume is confirming what I see here. You're seeing 2 times normal volume, which means other people are seeing what I see. And I tend to think, it's so obvious that everybody's already there. No, it takes time. And, I was sort of going through this on the way up here. I said, so this is what's going to happen. You're going to have a portfolio manager say, hey, get me my natural resource analyst. But no, they're not, because they don't have a natural resource analyst, because they've been talking about Apple, NVIDIA, Nike, Disney, etc., and no one was paying attention to this. And they shouldn't have for 12 years. Fukushima happened. I'll go into that later. But it's time. It's just time. It's just time. And I want you to do your own work. I want this to be collaborative. You give me your ideas, your articles, your charts that you see. Someone came back, called me an idiot. I've been called worse. I could take this. So that's what's going on with the 2 best ETFs out there. We own them. It's 20% of what we do. And I think what's going to happen here is we're going to make substantially more money down the road. And here's why. Here's the spot price. And this is get a little bit wonky, okay, but spot is the physical uranium that you have here. It'd be like oil that you had to deliver tomorrow. The futures price is what you have to deliver, what the price is if you deliver it 6, 9, 12 months down the road. So this is the spot uranium price. Uranium is very weird, where these are all under long-term contracts. So there isn't a liquid futures market that you can go say, this is what people are thinking. It's all people reporting to UXC predominantly, what they're contracting to the utilities for their committed uranium production. And this is supposed to be the slow time of the year, and we're acting really well in the face of that. You see this peak here at 140 back in '07. That was a 5-bagger from where we started there. And then we came down to 70 as the great financial crisis happened. Fukushima hit, and all the things that you would expect to happen happened. The politicians freaked out. They shut down nuclear plants. The demand for the metal completely imploded. The weaker mines died and went away. And certainly plans for new mines were completely shelved at best. And during COVID, when we were all locked up, it hit $18, and it's now 12 years later, and we've worked all that off. And so now, this is from my notes from last week or 2 weeks ago, now looking for a breakout above 60. It just happened. It just happened 2 days ago, and I couldn't even find a chart that was updated to put here. This still shows 57. The reason I bring that up, when you take out 60, that means you have broken through resistance. And the next one is that $70 level, the Fukushima level. And when we take out that 70 level, then the utilities are going to say, to hell with it, get me uranium, here's a long-term contract, and I'll try to keep it under triple digits. And by the time this is all said and done, I think we attack 140 again. And that's 2 times. I think that's absolutely reasonable. This is a small amount of the cost of running a nuclear plant. And what happens? The mining companies have production growth, let's say 10%, making that number up. But then the price goes up another 20, 30, 40. The revenue line expands, the expenses stay relatively the same, and the earnings explodes down at the bottom line. And so I think it's reasonable between attention, flows, valuations increasing. This isn't on the front page of the Journal or the Economist now. It will be in a year or less, and I think these things can go up 4, 5, 6 times from here. And you know me, I don't say that lightly. I'm not a huckster. I don't promote. It is just I've seen the history. I know how this works. And when you start to have institutions say, get me into some uranium, and there's a $60 billion bucket and money keeps flowing, we're going to have some fun here. And I want you along, and I don't want you to miss out. And that's why I'm being so strident. That's why I'm being so blunt. And send me the uranium information, news, charts, whatever that you see, both pro and con, and we'll all make money together. So that's my story. I'm sticking to it. And uranium is going to be a big opportunity, and I want you to be along with me for the ride. Please go to my website, stockmarketauthority.com, and subscribe to my free newsletter. When you do that, you get my How to Sell video, which is still valid, and it's like 3 minutes, and it just shows you what other people don't talk about is how to sell. I want you to lock in profits and minimize losses, and I know I'm repeating myself, but no one talks about this, or very few people talk about this, and I listen and watch all the other podcasts that are out there. And if you don't lock in profits and you give the money back, we're all wasting our time. And I don't want you to waste your time, and I won't certainly waste yours. So that's today's top story. Now it's time to check the mailbag.
There's a letter in your mailbox.
You got mail. And Murph came in via text, friend of Jack's. And just a quick aside, the reason I do this is I talk to my sons, Bobby and Jack. I like all of you. I love them. They came to me with questions when they were in student-managed investment funds, and I put this on steroids. And so I want to grow. So if you've got any connection to student-managed investment funds at all these wonderful universities around here, I want to talk to you because I can teach you about charts and I can teach you how to sell. And you guys can probably model better than me, and you're probably smarter than me. But I've been doing this, and I know where the bodies are buried, and I know how to read a chart, and I know how to sell stocks. So stay tuned. So Murph asks, been eyeing some oil charts lately, XOP in particular, see if there's anything noteworthy. XOP is the VanEck Oil Services. No, sorry. OIH is the first one. OIH, my bad. And this is a hold. Jack, I'm taking your advice. This is a hold. And I'll give you the nitpicks of that. But this is very similar to Professor Van Levy from the University of Houston asking about Schlumberger last week. And for some reason, and I don't really know why, and I'm willing to listen to all theories on this, the oil services companies, the rigs, the seismic companies, the frackers, the picks and shovels that go into producing oil and gas for the pioneers and the EOGs of the world, services are acting better. And I don't really know why that is. I don't know if it's because they were beaten down more. The valuations are cheaper. But this is a new high on good volume. This is a 91 relative strength, which means it's beating 91% of the stocks out there, obviously. My nitpicking is I don't see the relative strength line confirming this new high, but that is... it's likely to happen. I kind of like to wait to see the whites of their eyes in these cases. This is the Schlumbergers and Baker Hughes and the rigs and all these kinds of things. If I see that relative strength confirmation, this likely will be a buy. And frankly, Murph, when you were texting me, I was going through my thousands of charts, and I see a lot of the things that you do, and I'm just going through and going to pick out, what is the best of the best to exploit as we go into the end of the year and into the future. And oh, by the way, crude's in the 80s now, 84, 85, depending on what you look at. It was in the 60s when we talked about it before, and there's a lot of people saying, "Oh, Nvidia's too expensive. I want to go find value, if you will." And this is a small part of the S&P. So getting to market weight and overweight is not that tough. So you're onto something. We took out 350. It's a new high. The volume's okay, not great, which is why it's a hold and not a buy for me. But you're on the right track. Please stay tuned, and I'll let you know either here or the newsletter or social media or all the above when I decide to say, hey, we're going to go long energy services again, and let's rock and roll. Next is XOP, and this is the S&P Oil and Gas Exploration ETF, which includes the pioneers and the EOGs that I just mentioned. This is a hold for me, and again, it doesn't look as good to my eye as the energy services. It looks good, promising, but I want to have the 10 best ETFs I can have so that I make money every year and we make money every year. And I know that sounds audacious, but so far we've done it. This red line that I've drawn across here is about a year ago. 161 is the resistance level. It's 153 now, so not that far away. I think it's going to struggle to get above 161 the first time around. I could be wrong, but I think that's what's going to happen. Again, the relative strength is 83, so again, it's not as strong as the energy service names. And which is normally not the case. I think the E&Ps usually lead the service companies, is my recollection. I'm going to do more work on this. The volume is okay. I want to see, and this brings me to my point. You mentioned, this fits into the energy theme with uranium. Now, uranium is going to kick energy's ass. I mean, I hope I'm being sufficiently blunt there. The uranium fundamentals, and I mentioned this to you offline. The uranium fundamentals are way better than the oil and gas fundamentals. First of all, uranium is a solution to get to carbon neutral. And even the most strident tree-hugging liberal is saying we got to have nuclear at this point in time. The days of Jackson Browne concerts are over. Solar and wind aren't cutting it. Now, as I drove here, I saw 3 Teslas and thousands of gas-powered vehicles. So it's going to take a long time until we go to oil and gas's funeral in earnest. This is going to take decades. So, but I think the oil and gas companies sort of face that multiple issue of you're eventually going to die, we just don't know when. And I think it's going to be way out in the future. That's just me. But there's uranium, and then there's oil and gas. And I don't want to have energy be an umbrella that encompasses them all. Uranium is a much better situation than the energy stocks right now. So the oil and gas stocks. So I hope I've made that clear. It's a hold to me, and but again, I've got a bunch of things that I've got on my radar screen, and I'll let you know when I pounce and say, hey, this is a buy, and let's go north with these. Sam from Orlando emailed me and said, I work at Disney, DIS is the symbol, obviously. What do I do with the stock? It's a hold, but a sad hold, and it's barely a hold. And I'm going to be, again, as subtle as a 2x4 here. Disney is not a great company. And the reason I say that is that that's usually the preface. When someone gets asked on CNBC, we all think it's Snow White and Old Yeller and Mickey Mouse and steamboats. And that's great, but times have changed. And Netflix made your life miserable, and so you had to create a streaming service that loses a ton of money. And there's all kinds of other problems here, but GE was a great company and a blue chip, and then it stunk. IBM was a great company and a blue chip, and then it stunk. So don't buy into this. And this is also me casting a little bit of shade on the Peter Lynch, know what you own. And, go buy the sneaker brand that you like, and go buy Lululemon because you like the pants and what have you. That's great when they're all lined up together. But Disney's business clearly stinks. We topped out at 200. My sell discipline kicked in at 160. I can see that from 3 city blocks. And that's double where we are right now at 80, which is a multi-year low. It's a COVID low where we are right now. So now this other line I've drawn here is 100, and I think it's going to be stock market 101. Yeah, there's a rumor that Apple's going to buy him. I think that's very wishful thinking. This is a sell at 160. It's a hold now. I think anytime it bounces close to triple digits to that 100 level, you're going to be whacked with sell orders. I think the turnaround that Iger's trying to do is going to be disappointing, tough, maybe impossible. And he probably should have stayed on the golf course, is my guess, but couldn't help himself. So I hate to be like that, but I if you're there and you know something, you're an insider, and you think you know something about Iger's long-term plan and it's promising, great. I'm all ears. But I don't like Disney. It's a very weak hold for me, and there's so many better things to do. The world is so vast. There's so many opportunities. I just need 10, and this dog isn't hunting. So that's it for the mailbag this week. If you want to write into the show with questions or comments, email me at bakes@stockmarketauthority.com. Even better, leave me a voice memo, and we can play your question on the show. Let's take a break. When we come back, we'll take a look at the Stock Market Authority portfolio, and I'll give you this week's Bakes Takes. You're listening to Stock Market Authority. Hang in there. We'll be right back.
Do you want to become a better investor? Do you want to learn how to make money in both up and down markets? Then you need to go to stockmarketauthority.com and sign up for our free newsletter today. Stock Market Authority is run by award-winning investment manager Kevin Bakes Baker. His aim is to save you time while teaching you how to be a better investor. Bakes saves you time by diving into all the latest stock market news and information so that you don't have to. He reads all the latest articles, analyzes the charts, and listens to all the relevant podcasts. And then once a week, he gives you a breakdown of what's happening in the market. Stock Market Authority is constantly outperforming the S&P and the HFRX. Bakes is going to share with you his weekly stock observations. He'll give you concise insights and show you how to lock in profits and minimize losses. Stock Market Authority is making money in up and down markets. Wouldn't you like to do the same? So join now and let Bakes show you how. Head on over to stockmarketauthority.com and sign up for our free newsletter today. That's stockmarketauthority.com, making money in up and down markets.
And we're back, and we're talking about uranium, and I don't want you to miss out. It's just that simple. Let's go through the portfolio. Since inception, we're up 2.64 times the hedge funds. They were down last year. We made money. We shorted Cathie Wood, the ARC fund. We shorted the SPACs, and it's wonderful, all the opportunities that the ETFs give to us right now. And I just want to, this experiment is working. I didn't know it was going to work 3 years ago. It clearly is. We've made money every year. So far, so good. And your money manager has a different goal. I know you don't like hearing this, but the market goes up 70% of the time, down 30%. And in the down 30%, they have handcuffs, some self-imposed and some outside imposed. That means all they're going to do is lose less than the next guy. You're going to own a little less tech, a little more energy, a little less banks, and you're going to, try to outperform by losing money. And I talked to, especially older folks, and they said, Bakes, I came into an inheritance or a settlement, and I want to put it in the market, but I don't want to lose money, and I think I've got a solution. And so this experiment is working. My end game is eventually I want to create the Bakes Stock Market Authority ETF and become your hedge fund. Less expensive, simple, liquid, open, and frankly, fun. And so I'm having a blast. I hope you are. And that's my very transparent aim here. Now, we talked about uranium. We're 20% plus in uranium. We're already making money in the first 2-3 months, weeks. And I think we're in inning 3, maybe 4. So stay tuned. Argentina, we're about 12% or so in Argentina. Mercado Libre, the biggest name in this ETF, hit new highs the other day. The economic news is lousy, but the stocks are up. So the stocks are win. We're up 25% there. Everything you see on the screen is green. We're making money in all of our positions here. We've cut some losses, but at least now we have the 7 best, and I'm looking for 3 more. With 30% in AI, robotics, technology, the NVIDIAs of the world, if you will. And we didn't catch it perfectly, but we caught it, and here we are. We own Bitcoin through the Grayscale Bitcoin Trust. I had a lot of you wonderful folks come in through YouTube, and I know you're watching the whole show because you're asking questions about the tail end of the show. So thank you for that. I really appreciate your attention. Someone asked, okay, what's the best way to own Bitcoin? And I say, I keep things simple. It's an ETF. You pull it off the shelf. It can go into your retirement account. It can go into your IRA, so it's tax free, and it trades at a 20% discount to the Bitcoin they hold. I think that when they get a full conversion from the SEC, that discount goes away, and I think others are going to follow. The demand for Bitcoin goes up. The government has clearly shown that they can't run a popcorn stand. They continue to hemorrhage money. They continue to print money. And Bitcoin provides the worldwide alternative to the dollar that I think at least has a hedge component to it that drives it back up to the 60,000 level at some point in time. So it's not going to happen next Thursday, but I think it's going to happen. Cash is around 26% or so. Again, I own 7 of the best ETFs. I own the 2 best ETFs that I see right now in the URNM from Sprott and the URNJ from Sprott. And, we didn't catch the turn. Frankly, we probably should have, in hindsight is 2020, January 2nd should have gone, almost 100% into tech and covered the shorts, et cetera. But that isn't the way the world works. It isn't that cut and dry. So we're down 14%. The S&P's up 17%. We beat them by 25% plus last year. They're beating us for right now. And I like our chances over the next 4 months. So please stay tuned. I'm going to go through recent improvements in my newsletter, social media posts, so please subscribe, follow, and share. That's how we're invested on September 6th. We got 4 months to go, folks. Let's have some fun. Let's get into this week's Bakes Takes. My takes today are very straightforward. You're shocked, right? Please, if you're in a student managed investment fund, I want to hear from you, and I want to see how I can. I'm very likely going to develop a course around this, technical analysis, reading a chart, and how to sell, because it is given short shrift by the financial press and all the podcasts and YouTube channels that I see out there. So I want to fix that, and I'm going to give you a lot of free information, but then I want to have the potential of a more intensive course that takes us to the next level. What I saw as I went through my 2,000 plus charts, and these are top level things. I'll go into more detail as we go forward. Sugar and oil and gas are positive. That's it. And now, I shouldn't say that. Look to me to be with new emerging positive change happening in them right now. Now, on the negative side, healthcare providers, the hospitals, etc., maybe the HMOs too, utilities, consumer staples, the food companies, the Kellogg's and what have you. Muni bonds look bad to me. Food and beverages rolling over. Gold and silver look terrible. The Russell 2000 dividend growth looks bad. So for anybody looking for a small cap resurgence, I don't see it right now. And restaurants in Chile, the country Chile, look bad. Now, frankly, I'm posing the question to you as well as to me. I don't really know what to make of that yet. Again, economists can't pick stocks, so I'm not going to turn into one. I don't play one on TV. My knee-jerk reaction, and that's all it is, it's either the defensive kinds of companies, staples and foods and what have you, they're rolling over because people are getting ready to become more aggressive, more risk on, and go forward with that. The flip side of that, which is why I have a big question mark that I drew here to myself, does this mean interest rates are going up? We've seen the 10-year creep up, pretty meaningfully, and when the utilities and muni bonds start to act badly, does that mean it's anticipating even higher interest rates down the road? So I don't know the verdict on that yet. I might never know that, but I just bring it to your attention to look at your portfolio anew and say, do I really want to own these groups at this point in time? And fire questions away to me as always. Then I really wrote down here with an exclamation point is uranium is going to kick their ass. And it's just that simple. I believe it fervently. I haven't seen a technical plus fundamental setup like this in a long, long time. And I really want to bring it to you. So do me a favor. Please go to my website, stockmarketauthority.com. Sign up for the free newsletter. The How to Sell video is as relevant as it's ever been. And those are my baked takes for this week. And as always, after I talk about all the serious stuff, I like to end up with some much-needed levity. And this is Pablo Francisco, very, very funny comedian, little tortilla boy, too. It is as silly as it sounds. It's 4 minutes or so. It'll make you laugh. Go see him if you see him live. I have not seen him live yet. I'm willing to do so. That's it for today's show. I don't know what I'm talking about next week, but I'll be here. Chrissy will be here. Murph will be here, and we'll have some fun. So thanks for everything. Go to my website. Go to my YouTube channel, and I will see you soon. Take care. God bless. Bye now.
The views and opinions expressed by the hosts, guests, or callers of this program do not necessarily reflect the opinions of the Studio 21 Podcast Café, the United Podcast Network, its partners, or affiliates.